Hi, Standish Associates. We've gone through 14 videos so far, and there's quite a bit of information in there. So I would like to zoom out for a minute and take a look at where everything fits in, a roadmap of sorts of where we've been and what else is there to talk about. So in the earlier videos, we talked about the difference between an open-ended fund and a closed-ended fund, how investors can come and go in an open-ended fund, and a closed-ended fund, once it is closed, nobody can come in and nobody can go out, and how Standish plays in this space. There's other companies that do open-ended fund administration, but that's not who we are. We also talked about the three entity structure, how we start out with a management company, and we also form a GP, general partnership, that invests in the limited partnership. And the limited partnership is the fund structure. So once a company does very well in its fund one, it can raise the fund two, fund three, and fund four, so on and so forth. And each one of those funds has a 10-year life. First part would be the first 5 years would be the investment period, and the second 5 year would be the harvest period for each one of those funds, and they're staggered. Once we finish that, we talked about the more advanced topics such as the 220, the 2% management fee, and remember that is on commitment, and 20% of carried interest, and remember that is on gains, that goes to the GP. Management fee goes to the management company, carry interest goes to the general partnership, but ultimately ends up in the founder's hands anyways. So that's where we stopped off. The line shows off. That's where our previous video ended. Going forward, I would like to talk about capital calls and distributions. Capital calls, we briefly touched upon that before, how that's in a closed-ended fund. We do capital calls because to invest in a closed-ended fund, we do not put our money in at once. As GPs find deals, GPs will call capital. And there's also other things that GPs call for, such as expenses and management fees. We'll talk about that. Capital calls are pro rata. Distributions are not necessarily pro rata, and we'll talk about that as well. Pro rata meaning, whatever percentage of the fund that you commitment represents, you will get that. So distribution doesn't necessarily equal pro rata. So for most of your training, other training at Standish, you talk about the operations and the accounting, or you talk about the accounting first. And what I'm trying to do here is talk about the structure first of the fund, of the structure of the not only the fund but of the management company and GP also. And then we want to, once we know the structure and the operations of these entities, then the balance, if we were to talk about what's on the balance sheet and the income statement, it would make a lot more sense, and how those accounts will reflect the operations of the fund and the GP. We've already talked about the income statement of the management company, and we can talk about the balance sheet of the management company as well. And the balance sheet of the management company is fairly standard. It looks like the balance sheet of any other company. And then ultimately, I want to talk about the fund of fund and the reporting deadlines. The fund of funds are closed-ended funds as well, but they invest in limited partnerships of other funds. So they're LPs of other funds. And because of that, there's certain things that are different about fund of funds, such as carry interest, such as management fees, such as the reporting deadlines are also different from a regular direct fund. By direct fund, I mean funds that invest directly into equity of other companies. So, I hope that gives you an idea of the overall structure of our training and where we've been and where we're going after today. Thank you.